Today we're going to talk about, are realtor fees deductible? And we're going to really dig in on how that works. What are we tracking, and then how we can set that up in our favor as well to work for us. This is Val Lemoyne, CEO of the Real Estate Made Easy Group, powered by Keller Williams. So first, to answer the question, yes, realtor fees are deductible. And those get added on to what is called your basis. And everything revolves around the basis. So let's start by explaining what that is. Your basis is your initial cost of purchasing the house. So as the buyer, you would have, of course, the purchase price of the house. Let's say the house costs $300,000. That would be the first number in your basis. Then, if you had to perform an inspection, an appraisal, if you had to pay some of the commissions, any closing costs that you have to pay, anything that entails the purchasing of the house would all be added in to your basis. Why is that important? The basis really becomes important actually when you sell the house, because the house will have increased in value. You have to figure out how much of that is taxable income. So over time, any improvements that you make to the house actually get added on to your basis. So if you repaint the house, if you do build a fence back there, replace the roof, all of that you can tack on to your basis, your total cost of the house. Fast forward 10 years, you sell the house for $450,000. So your original basis, counting all of the commissions, closing costs, repairs, everything is $330,000. $300,000 plus the additional $30,000 from miscellaneous expenses. Then you're selling the house for $450,000, which is the new sales price. From there, now you're paying the commissions of the agents, right? If you've agreed to pay to any closing costs, all of that comes off of the $450,000. So let's say when it's all said and done, it's $425,000. So $425,000 minus $330,000 would be $95,000. So $95,000 would be the taxable amount that Uncle Sam could tax you, because that is income, right? That is extra money that you now have that you didn't have before the sale. And so any income is liable to tax. Now, we do have a one-time, once per lifetime, $250,000 per person credit pertaining to real estate. So that means that if you haven't used up any of that credit yet, that $95,000 can actually be taxed zero. If you sell your house, you've never taken advantage of that credit, up to $250,000, so it would be $500,000 per couple. You take that $95,000, you now have $155,000 left credit to take on house appreciation when you sell it. The only catch is you need to have lived there 2 out of the last 5 years. And as long as you've lived there 2 out of the last 5 years, you don't pay any capital gains up to $250,000, or $500,000 if it's a couple taking advantage of this scenario. So great tip, great tax write-off advantage to take care of. I mean, that will save you, up to a third of the total potential net tax liability. So, but let's say that you have maxed that out, and regardless, you still want to take advantage of increasing your basis so that you're using less of that number towards your lifetime potential write-off. So realtor commissions are deductible. They get added onto your basis, as do many other things. And it's very important to keep track of, because that will translate to a lot in tax savings. Thanks so much for watching, guys. This is Val Lemoyne, signing off.